Welcome to Dennis Money's 2 Cents, your weekly recap of headlines and stories. I am Matt.
I'm Taylor.
And I'm Rabih.
Don't worry, Taylor, we're going to give you a pass. You're a little rusty. And why are you rusty, Taylor? Let's make the first announcement on 2 Cents here. Why are you rusty? Why have you been away?
I am rusty because we decided that three of my offspring in this world would make sense and was not a bad decision. So we had our third child. And
yeah, you did.
This is a public announcement, and it's also a public apology to all my clients who've tried to email me in the last 3 weeks.
Taylor has been out. What did you say? You have been totally checked out for the last 3.5 weeks
from the world. I guess this is just, it just goes to show that women are 1,000 times better than men, because my wife handles everything, and she works part-time and she just does everything, and so she's out for 2-3 weeks for maternity, and I'm in charge of it all, and I don't even have to work during that time, and I'm just hanging on for dear life.
What did you say? The first thing you said to me when we hopped on our one-on-one when you were back, I'm like, "Hey man, how are you?" You go, "I'm tired." Oh no, doesn't even need to be said. Women are super freaking heroes for sure. We can all agree on that. So,
it is.
Well, welcome back, Taylor.
My wife's a superhero. She's incredible, and she just went through a C-section, and it's kicking my butt more than it's kicking hers.
Are you recovering okay from the C-section?
I need the recovery.
Yeah. Well, welcome back. Yeah, congratulations. We're happy to have you. You probably weren't even prepared for that, but you knew I was going to call you out and make you announce that. So we're happy to have you back, and happy that you're doing okay after the C-section. Okay. So as for the agenda, we're going to hit market update from Rabih, obviously. And then we are going to talk about a little bit about student loans, a study that came out regarding the impact on the economy of student loans done by the New York Fed. And then we're going to talk about the regrets of the rich, right? Taylor found an interesting story that I think is worth talking about. So, Rabih, let's jump to you and just hit market and economy update.
Yes. So the headline for the last week, if you opened any finance app lately, is that the 10-year treasury hit the 5% mark, which just tells you that money is very expensive now compared to how it was the last 10 years. Interest rates are trending up for long-term rates, and this is what we've talked about on this podcast multiple times as like the bear steepener, right? The interest rates on longer term ends are increasing, and as they are increasing, they are slowing down the economy further, and this is what the Federal Reserve wanted in the first place, so nothing surprising about that. But what is interesting is how this is affecting the inverted yield curve. The yield curve has been inverted for over 400 days, which if I'm not mistaken, it's the longest on record. The recession indicator has been on.
The recession indicator did not bring a recession. Interesting.
And the light has been on for like over a year and a couple of months. But what is interesting, given that an inverted yield curve is determined by looking at the interest rate at the 10-year and then looking at the interest rate at the 2-year and look at that ratio, is now suddenly, as the 10-year is increasing, the inverted yield curve is becoming less and less inverted, which is looking more like it's still slightly inverted, but it's gonna be looking more how it usually looks like in normal economic situations, where it is flat or slightly upward sloping. So just to give you some background, in July 2023, the yield curve was so inverted that the difference between the 10-year and the 2-year was almost 1%. It was actually over 1%, 1.0024. So this means the 2-year was much higher than the 10-year by almost 1%. Now, as the 10-year is increasing, the gap is narrowing. And as of now, we only sit at like 0.28% or like 25 basis points, which is interesting for these reasons. Most of the time in history, when a yield curve uninverts, aka the 2-year interest rate becomes less than the 10-year interest rates is because higher interest rates have pushed an economy into a recession, and the Fed had to interfere to cut rates down. So the way it uninverts is by having the 2-year drop so much that it's now below the 10-year. Whereas in this case, although interest rates have been higher, we did not go into a recession, and this did not prompt the Fed to cut interest rates. And the 10-year is catching up because expectations are, going into the long term right now. And this is very rare to happen. And it just tells you that we are really in a new economic environment. Does this make investing different? No, but economically, it's a very dynamic system that kind of doesn't repeat itself. So now as the 10-year is increasing, we would expect this to be the norm because people are expecting interest rates to stay at 5% for 10 years. Like this is what it tells us when interest rates at 10%.
Yeah.
And we have the fact that a recession didn't happen to thank.
But wait a second, that's all I heard for 2 years, that a recession was coming, and at some point it will. But just to reiterate that, because we mentioned this I think last time or maybe 2 times ago, just this idea of what moves those two ends of the yield curve, right? So just to, again, in normal brain, not brilliant Rabih brain terms, the short end of that yield or that curve is what the Fed controls when people talk. And I think this is really important, right? Because when people talk about rates, it's like when people talk about risk, it's like, what does that really mean? When you talk about rates are going up, it's like, well, there's a broad spectrum of what rates we're talking about, right? And so I just want to maybe reemphasize this, that when we talk about rates being raised by the Fed, Rabih, you're saying the short end of that curve is what the Fed controls. The other end of the curve, the longer end of the curve, is really just supply and demand economics and movements in consumer expectations and things like that, right?
Exactly.
Okay.
Exactly.
So you're saying it's pretty rare that the curve reinverts based on the long end versus the short end.
Yeah, it's usually the 10 or the expectations stays below the 2%, and the expectations are kind of correct that the economy is going to head into a recession and the Fed has to react back. This time, the Fed was the one who was correct, between quotes, so far. And the market expectations are reverting back to what the Fed thinks, that a smooth landing is going to happen instead of a hard recession.
So we're back on the smooth landing, or the soft landing here.
Yeah, the soft landing, smooth landing is at a higher probability of occurring than a recession, given the latest data. And thanks to us all spending money, it's the consumers that have been pushing the economy to avoid a recession so far.
Oh, I thought you were going to say thanks to us, like Dennis Advisors, and I was going to say absolutely, thanks to us, we landed this plane, or we're going to land it. Right?
Yeah, I don't know what's on your credit card, but if you're responsible for the strength of the U.S. economy, thank you, Matt, personally.
It is definitely not me. I can tell you that right now.
Taylor, I think it's just the listenership of our podcast. We have such a large reach. I think it really affects it.
That's absolutely what it is. All the dentists out there that listen to us, and that we've reiterated to them that 70% of the GDP in America is spending, and so they're doing their civic duty, their American duty of going out and propping up the economy. So, okay. So that's awesome, Rabih. I love these updates. I keep getting out of this that is very clear. We are not in a recession, and all signs pointing to right now, nowhere close to that. Again, this could change really quickly. I'm not predicting anything, just saying that as of right now, we are nowhere close to a recession. So anything else on that at all that you want to hit?
This is all fixed income and like how interest rates are moving. I still wanted to hit a little bit on equity markets, and we know that the stock market has been selling off lately due to geopolitical risks and expected slowdown. However, right now we are going through the earnings season. So hopefully next week or the week after, most of the companies in the S&P 500 would have reported earnings, and we would be able to gain insights from the guidance. And then we will figure out, so when we're looking at interest rates, and looking at these and saying, oh, these are the expectations. It's mainly the expectations of like pension funds and endowment funds and big money managers. When we look at the equity market and we look at earnings, we're looking at the expectations of, you know, CEOs and boards across companies across the US. And we will be able to compare and contrast those different expectations.
Cool. Did you just drop a teaser?
Yeah. We haven't done that in a while, so why not?
I like it. Okay, let's move on to student loans. So I'm guessing most everyone out there knows by now, student loans have started again. However, I guess this is a time to hit kind of a caveat, because we just talked about this in our client only huddle, that because, so this is kind of a side note, because it's been such a long forbearance, and because in the interim, a lot of these loan servicers have changed, consolidated. There's been a lot of movement on the back end of these loan servicers. To put it, I guess, simply, it's been kind of a crap show with what's happening with these payments coming back on. And so we've actually been hearing, and Taylor, I know you and Jake were talking about this on the client only huddle, that there's actually like individuals still being put on forbearance at the servicer level. Do you have any other details on, or any thoughts on this, Taylor? Anything you're hearing?
You know, it's funny because I've been tapped into this for, the last several years and on the details. And then I've been out for 3 weeks and there's been all these updates.
The baby.
Well, and that's the thing is, like, this moves so quickly that there's so much that's happening.
Yeah.
Right? If you're not up to date with recent changes, you can miss something.
Yeah.
For example, the big one that Jake brought up during a client only huddle is they're so behind and they're so disorganized with this consolidation from, several different student loan servicers to now only 3. We literally have had millions of dollars in student debt, hundreds of millions of dollars in student debt that has moved and changed hands. And then they've also tried to get millions of payments back in force, working all properly, all the solutions, everything figured out. And it really has been a crap show. And there's just so much going on that they have put individuals on forbearance. And typically, historically, forbearance didn't mean interest-free forbearance. It just means you didn't have to make a payment and interest was accruing. But this is a forbearance that's unique to them just saying, hey, we don't have things figured out, so we're just going to put you in forbearance and forego interest because we don't know what we're doing yet. So I've had several clients actually email me and say, hey, I'm supposed to have a payment, but they've kept me in forbearance. And it's just their luck of the draw.
Yeah.
Right?
It's like, congratulations.
They're getting a unique extension that very few others are experiencing. So if that's happened to you, it's very unique and it's one-off. But yeah, there is so much going on right now. There's payments that are wrong. There's payments that are inaccurate. There's payment plans that are inaccurate. And there's people that they've just given up and said, hey, we're putting you on forbearance. We don't even want to deal with this right now.
Yeah. A lot of these servicers, I can imagine they've basically been on vacation for 3 years and now they're back in the boardroom sitting there being like, what do we do? Well, I don't know. Let's just
think of it from a logistical perspective. I'm sure these servicers had to lay off, thousands of employees, and then they had to hire and train thousands of employees on top of the logistical nightmare of moving hundreds of millions of dollars in student debt onto a new platform with very little experienced staff. I just think about running a business with this, we have 20 employees, and when we have to hire and fire, it's a nightmare for us. I cannot imagine on this scale what they're dealing with.
Well, the fact that it's such a mess on their end is a benefit to a lot of people on the other end. The fact that they're saying just keep not paying, A, surprising, but B, congratulations. That's amazing. So that wasn't the story. We just wanted to mention that, hopefully you're getting communication from your servicer. But again, we're seeing this across the board. A lot of, what's happening with this mess has actually been beneficial, at least in the short term. So, but the actual story found this study. This is actually in the Wall Street Journal. They reference a study from the New York Fed, who was basically trying to figure out what is the impact to the economy of these payments coming back on, assuming they actually do. And what they found, they have a very specific dollar figure based on this study. They said millions of student loan borrowers are likely to curtail their consumer spending, and they have a monthly number, an actual dollar figure. What would you guys guess from their research? The average consumer, what are they going to change or reduce their spending by based on student loan payments on a monthly basis? Do you have a guess, a dollar figure?
I would assume $200 to $300.
Yeah, $500.
Okay. They determined on average it's $56 a month. $56. That's all. So they said the average is $56 as they restart payments on student loans. The only thing I can determine, well, so let me do this. They said there's 28 million federal student loan borrowers. So this amounts to about $1.6 billion in less consumer expenditures a month, which you hear that and you're like, man, that's a lot of money, right? That is 0.1% point reduction in aggregate spending from August levels. That is like nothing. So it's like a rounding error. And so they're basically saying that right now, student loan payments coming back on, again, according to the New York Fed, is impacting the economy very, very small, on a very, very small scale.
Why is that? Is it because people are only paying like the minimum payment?
Yeah, what I can determine from this is I think the save plan is probably making a big difference here. And probably maybe everything we're describing here with the mess that's happening on the back end, but I don't know if they're factoring that in. I think a lot of it just has to do with the new program that's out. Like they're saying right here, new rules on federal income-driven repayment plans can reduce monthly loan payments based on borrower income. So I think a lot of this is just the fact that this new program that's out is allowing them to keep a much lower payment.
Oh, that's interesting. Well, and I think it kind of comes back to way back when, right? When there was going to be $10,000 of loan forgiveness, that was effectively going to wipe out. I mean, it was like nearly half of student loan borrowers, their balances.
Yep.
So the vast majority of borrowers do have quite a small amount of student debt, right? So if we're talking average, it's going to be pretty small just because people have less than $10,000 in student debt. But the takeaway, I think, for our clients is just be careful of anything that says average, because
it's very true.
It's only affecting the average American by $56 a month is not the way that it's going to be affecting our clients.
No,
right?
I know.
I mean,
maybe it was a mistake even bringing this up.
Yeah, I mean, for
They're
our
like,
clients,
how dare you, sir?
It's the tune of thousands of dollars a month difference. It's some significant changes, and I've definitely felt that, and have continued to felt that with clients that I'm talking to.
For sure. So what you're saying is that was really mean of me, and I'm really sorry. The takeaway for me is just, again, we're always wanting to point, when I say we, I mean like the media and people that are nervous about what's like this whole like recession narrative or the market's going, is going down, whatever. I think a lot of people want to point to something. They want a reason to look at and say, oh, this is it. This is what's going to take down the economy. And so I think that's my takeaway from this is, when people talk about student loans now, the total balance being like 1.5 trillion or something, I think that's what they mentioned recently. It's like, okay, now payments are coming back. It's really easy to make that link to say, oh, this is what's going to take it down. And then it's like, actually, it's not. This is actually going to have a pretty minimal impact on people's spending overall. Rabih, you're laughing. I don't know. You're smiling at that.
I'm laughing because I think 2 months ago when they said that student loan payments would resume, I went into the office and was like, guys, this is the needle that brings us down. I was that guy.
So it's us. We're like, this is it. I think I remember you saying that. I think
on the podcast too.
So we're calling ourselves out. We are going to reverse that. We actually don't think that is the case. So, okay, we gotta hurry up here because Taylor, you got to go pick up your daughter from school here. So, hit us with the story you found. I thought was super interesting.
Yeah, my only addition to the podcast is my ability to read current headlines and react to them. Right.
that is the whole point of this show. Yeah.
So I was going through on Yahoo Finance, and I saw an interesting article about NVIDIA's founder. His name's Jensen Huang, and he was recently interviewed on a podcast about his whole experience and his life and what he's accomplished. And just by way of background, Rabih, could you describe or briefly explain what NVIDIA is?
NVIDIA is, I love that you just put me on the spot under the spotlight, but NVIDIA is a technology company that focuses on the manufacturing of chips and processing units like GPUs that are very essential to coding onto them algorithms related to artificial intelligence that will fuel, the technology of the future.
He put you on the spot, Rabih, because he knew you knew the answer, and
because you would crush it. Well, and the other way I want to bring it up is like, if you had asked me that question a year ago, I would have been like, I don't, or 2 years ago, I'd have been like, I don't know, right?
Yeah.
NVIDIA has been in the news, recently, but it was actually founded in 1993. So they are now 30 years in business, this company that's been around.
And nobody knew who they were for outside of like people like Rabih. You're right, Taylor. Like outside of like the last 2 to 3 years, they've been all over the news.
For 25 years, they've basically been anonymous, and then it's only been within the last 5, and really in the last 2 to 3 years that they've been on anybody's radar.
Yeah,
right.
Yep.
But long story short, Hoang, he, if you look at his current net worth, and this always fluctuates depending on the stock price of NVIDIA, but currently his net worth is about 37 billion. So he's close to mine, but
barely
a little bit less.
Barely ahead of me.
So this makes him the 31st richest person on the planet. Right. So he's done all right for himself.
Not bad.
Right? There's only, 30 people that can claim that they've done better.
He's basically, sorry to interrupt you. He's done 2/3 of that net worth just this year because NVIDIA is up 196%.
Gosh, that is unbelievable.
So he's crushing it. It's fair to say, right? But
do you think he's tweaked his budget this year at all? Do you think he's tweaked his budget for that? I'm just wondering.
He's gonna now order the guac at the restaurant.
The extra queso at Chipotle. Yeah.
The reason why I found this article interesting is typically when someone gets, this high or reaches the top, you wouldn't expect them to have a response like they did. But basically, these people on this podcast were asking him, hey, you've been doing this for 30 years. If you could go back, would you do this again? And his immediate response was, I wouldn't do it. There's no way.
I love when Rabih looks like that. Rabih's got some thoughts. I can't wait for this. Keep going, Taylor.
And his, longer response was, building NVIDIA turned out to have been 1,000,000 times harder than I expected it to be, than any of us expected it to be. If we realize the pain and suffering involved and just how vulnerable you're going to feel, the challenges that you're going to endure, the embarrassment and the shame, and the list of all the things that can go wrong, I don't think anybody would start a company. Nobody in their right mind would do it. So his response was, despite reaching the pinnacle of success, if he could go back and do it all again, his answer was no. Right? It's just been too dang hard, and it hasn't been worth it, despite him reaching a net worth of $37 billion, which is almost like mind-boggling when you think about. Now, I think hindsight is always 20/20. And so you're talking to someone who's 60 and who's done it and has made all this money. And it's easy to look back and say, oh, no, it was too hard. I wouldn't do it again. I'm sure if you asked him when he was 30, if he would be willing to go through it, he'd probably say yes. Right. But it is interesting to hear someone who's done it, who's made all that money, and they're like, it probably wasn't worth it. Right. It wasn't all that it was cracked up to be. And it was so much harder than I thought it was going to be to get to this point. And the reason why that really just hit home with me is recently we're in the middle of end of year meetings, and we're meeting with all of our clients, and we're talking to them about the stresses and the worries that they have. And I just think a lot of business owners can relate to this, that it is very, very hard, and that there are a lot of stresses, and there's so much on their plate and so many things that they have to think about. And I've really felt that during this end of year, so I guess long story short, for our clients, I wanted to bring up this article and just have a little bit of like compassion. Like, just keep in mind that you're not alone, that if you're having these thoughts, like this is hard, this is really stressful, you're not alone. It's more like welcome to the club, right? It doesn't matter the scale or the size of your business.
They're like, what club are you talking about, Taylor? He's a billionaire.
Being an entrepreneur is hard. And he goes to end up in this article or in this interview, and he said, I think the biggest superpower that an entrepreneur has is ignorance, right? Them being ignorant to how hard it actually will be is their biggest superpower, because that allows them to do what they do on a day-to-day basis. So if you're feeling any of these feels as we're in the end of the year, and I think just the student loan is compounded this, it feels like just another thing that people are dealing with. You're not alone. There's a lot of people who are feeling these stresses. And that's what we're here for. We're here to help alleviate a lot of those stresses and help you get through it, because it is hard. But as Huang, as you can tell from his net worth, it can be worth it, right? There is a lot of financial benefits to sticking this out and getting through it all.
I've got so many thoughts. We're not going to be able to hit them all, but Rabih, you had a lot of thoughts churning during that.
Yes, but then like when Taylor ended it with like this very strong call to action, I'm like, stop having babies and come to the podcast more often. But I want,
stop having babies, Taylor.
Stop having babies. But the idea he proposed about hindsight, I found it very interesting, because whenever we talk about hindsight, it's usually about people who achieved success but through luck rather than suffering. And in hindsight, they are overconfident that they can do it every single time. This is like when you invest in Tesla or GameStop right before it like shoots up. But if you reach success out of sacrifice and sweat, the effect of hindsight is usually the opposite, where you don't want to do it. And I found that very interesting.
Yeah, definitely. I'll just say there's so many lessons in that, and we should maybe make this a long form podcast, maybe bring this back around to the main show so we can talk about it for a lot longer. But so many things. Number one, I think underrated part of that is how long they've been in business, how long it has taken him to get to this level. And Rabih, you pointed out a lot of this wealth was created just recently. So I think it's really easy to look at someone who's successful and forget, like we want to collect outcomes. We don't want to look at what it took to get there. We look at him and be like, oh my gosh, he's a billionaire. Look at this. But it's like, man, it took him 30 years. And this guy is going on podcasts saying he regrets it and how much suffering he went through. The other thing that I'm thinking about is from the outside looking in, it's really easy to look at, like Taylor, you mentioned that he's worth $37 billion. So you're like, he's made it. I think somewhere along the way, part of his regret comes from, I'm only going to guess, I'd love to talk to him about this, but I'm going to guess that of like his inability to say enough, his inability to be like, I'm good. And I would imagine that's part of this as well. So anyway, there's a lot more to talk about that. I think we should maybe make this a main part of the show, but Taylor, I think you wrapped it up nicely too. And just saying like, this is not unique. Billionaire down to like single location dentist. If you own your own business, or maybe if you don't even own your own business, I just think the complexities of life and money and all the stuff you have to worry about can be really stressful and sometimes feels like it's not worth it. So you're, like you said, you're not alone. You are in the same camp as a billionaire, just so in some areas, in some ways. So awesome, guys. Thanks so much. Anything else? Any other final words you guys want to add there? Okay, Taylor, we're going to let you continue to recover from your C-section. Thank you for joining us. We're so glad you came out of your hole to come talk to us on the podcast. Thank you for listening, whether it be live or on the podcast afterwards. We appreciate you so much. That was our 2 cents. Till next time. Bye-bye.